Okay, Assalamu alaikum wa rahmatullah. Good afternoon, everyone, and welcome to today's webinar. My name is Amjad Al-Qahtani. I'm a senior actuarial analyst working in BADRI for actuarial services. And I will be your moderator today for this session, inshallah. We're thrilled to have you all joining us as we dive into the KSA insurance industry current and future trends. We have an exciting lineup of speakers who will be sharing their insights and expertise with you today, inshallah. So before we start, I would like to let you know that this webinar is being recorded and the webinar will last approximately for the 45 minutes with time for discussing your question at the end of this session. So please feel free to submit your questions using the Q&A feature throughout the sessions. And we will try to address as many as possible during our discussion today. Before we dive into today's presentation, let me give you a quick overview of our agenda and introduce our speakers for today. This will help you understand the flow of the session and what to expect. So the first speakers will be Mr. Hasham Piperdy. He's the General Manager and Director for BADRI for Actuarial Services in Saudi Arabia. He will provide his valuable insight into the insurance services results and profitability of the listed insurance company. The second speaker will be Mr. Hatim Maskawala. He's the General Director in BADRI Management Consultancy. He will share his insight on the GWP and the insurance results by each line of business. Last 15 minutes of this session, we will be discussing your questions. Okay, so before we begin, I would like to highlight a new data management regulation. So as of September 15th, we have a new regulation called the Personal Data Protection Law. The insurance company should review their data privacy policy to ensure the protection of the customer's information and to ensure and develop the quality and the availability of the data. At the beginning of this discussion also, I will briefly highlight some key observation about the Saudi insurance industry and what that we will be discussing today. So as we can see here, the GWP has a growth of 13%, increasing from 34 billion in 2023 to the same, comparing to the same period in 2024 with 38 billion. The total interest revenue also grew by 18%, increasing from 27 billion to 32 billion. Motor and medical line of business are the main pillars of the Saudi insurance sectors. So in the first half of 2024, medical insurance still represents the largest portion of the total interest revenue. It represents 62% of the total revenue, while motor insurance and other lines of business representing 22 and 16% respectively. The share of the top 5 company is about 75, while the rest of the companies are representing 25 of the total revenue. Also, for the insurance service results, it witnessed a growth of 6%, increasing from 1.8 billion to 1.9 billion. So looking at the overall results, Saudi insurance industry profitability after zakat and tax witnessed a growth of 26 in the first half of 2024, climbing from 1.7 billion in the first half of 2023 to 2.2 billion in the first half of 2024. However, the performance was mixed. The top 3 companies, Tauniya, Buba, and Rajhi Takaful, saw profit totaling with about 1.6 billion. So overall, the results that we can see is in the positive direction. Later, we will see that for an individual companies and individual line of business, we have different results. So as I mentioned in the previous slides, that the insurance sector witnesses a premium growth of 11% in the first half of 2024. The total gross premium reached to 38 billion compared to the first half of 2023 with 34 billion. The share of the overall GWP for the top five company is 77 for the first half of 2024, as compared also to the same period last year, which was 75. And the rest of the companies is representing 23% in 2024. So the top five players, Raj Hita Capital has the largest increase with about 84%, following Raj Haybuba and uh, Mid Gulf with about 17 to 18%, and then Taawuniya Wala with about 3 to 4%. The mid-sized company GW performance actually mixed. Some of these are witnessing growth in their GWP, and the other are witnessing a sharp drop in their GWP. In terms of line of business, medical and protection saving have increased by 10 and 209 respectively. Motor GWP has actually reduced by 3%. However, the decrease in motor GWP was as a result of the competitive rates provided by the insurance company during the motor insurance campaign. So for the insurance revenue, this will be covered into much more details with Mr. Hisham. So over to you, Mr. Hisham.
Thank you so much, Amjad. I'm just going to share my screen. I think you just give me a minute. So thank you very much and very good afternoon, everyone. Right, hopefully you can see my screen. So last year, over the next 10 minutes or so, I'm going to cover the results for the industry at a high level before Hatim's going to go into more detail by line of business. So last year was an interesting year. First time in the history of the kingdom that every single company made a profit. But what's interesting this year, as we look into the actual details of the underwriting results and the net profits, it's been a very mixed performance. So starting with, I'm just going to cover 3 or 4 metrics over the next 5 to 10 minutes, starting with in our new IFRS 17 world, insurance revenue. So this is equivalent to earned premium, so gross earned premium, but adjusted for ECL under IFRS 9, so what we used to have for doubtful debts. And we saw the growth in GWP for the largest players. And if we look at insurance revenue, it mirrors that to a degree. So if we look at the industry as a whole, there's a growth of about 18% from 27 to 32 billion. But if you split the top 5 and everybody else, the other 20 companies, it's a very mixed performance that we're seeing. So top 5 grew by 21% overall, and the remainder in aggregate grew by 10% in terms of earned premiums or insurance revenue, I should say. But as you'll see, a lot of companies, the performance has been quite mixed, and there's actually been a reduction in 8 companies showed a dip in their insurance revenue. Moving on to the new, what I'd call, measure of underwriting performance, underwriting results, insurance service results. So again, it's very mixed. When we look at the performance for the industry as a whole, we grew by about 6% to 1.9 billion. But if you look at the breakup of these results of the underwriting profits, where are they coming from? 90% is actually coming from the top 5 companies. And so 6% overall growth to 1.9 billion across the whole kingdom. And 90% of that, about 1.6, 1.7 billion, actually came from the top 5. So a growth of 12% at the top of the market. But for the other companies in the kingdom, it's been quite mixed. In fact, there was a drop of around 20%, so around 260, 270 million. which is a drop from the same period last year. And you can see the performance has been very mixed across the market. Looking at the ISR, so this has come to be, a key metric that a lot of companies are looking for in the new IFRS 17 world, the insurance service ratio. So this is your insurance service results divided by your insurance revenue, and it's an indication of your, underwriting profitability, although it can be distorted. And you can see here that if we look at the gold bars for last year, the blue bar for the same period this year, um, a lot of changes across the region, but overall, the average is positive and profitable, but it's dominated by the largest players, predominantly Bupa, Tawinya, Al Raji, influencing this. And there's a lot of volatility as we look across different companies, and this will become more apparent as we look into the performance by line of business. And then finally, looking at profitability. So what's the bottom line? We saw the growth in the top line. How has this come through in terms of the bottom line? So profits have actually increased from last year, gone up by about 30% from 1.7 to 2.2 billion, which again looks very positive if we look at the kingdom as a whole. But again, if we split and segment between the top five and the rest of the market, the top five have increased by nearly 50%, and the rest of the companies have actually decreased. And with some notable exceptions. So if we look at the top five, they make up around 1.7 billion of that 2.2 billion, and the other 400, 500 million coming from the other companies. But things are not as rosy as they were last year. We are seeing signs, some companies starting to move into the red. In IA and GGI, here you can see in the bottom fives dipping into losses. And for the rest of the market, very, very mixed performance. So, strong performance here from the likes of, Watanya, Arabian Shield, but then very mixed and volatile results across the rest of the industry. In fact, when we look at the number of companies, I think around half, 13 out of the 25 companies actually experienced a drop in the level of profits compared to the same period last year. So one final metric I'm going to cover is combined ratio. Life used to be very simple in the IFRS 4 world, where we could easily pick up profitability and combined ratios. IFRS 17 does complicate this a little bit. But one metric that we've observed, net combined ratio, where we're looking at your net insurance service expenses plus your RI results, but it's divided by insurance revenue, which is gross of RI. So there could be some distortion due to RI, but nonetheless, this is a good metric which gives you an indication of profitability. And you can see that overall, looking at this metric, the average, you can, again, driven by the largest players in the market, in the low 90s here. And it ranges all the way up to 107 for GGI, who had a tough H1. Okay. And I think with that, yeah, I was just going to cover this slide and then I'll pass over to Hatim. Overall, looking at profitability, where's it coming from? For motor and medical, the largest lines in the kingdom, you can see that for motor, GWP has been relatively flat, in fact, a sharp drop, despite the campaign and the additional policyholders coming in from the campaign last year. However, the service results have been very positive. On medical, there's been a sharp drop. On the PNS side, you can see here there's a sharp increase in GWP. So a lot of the potential we've been talking about in the market is coming to fruition, and this sector is poised for very strong growth. However, the way that revenue is recognized, you don't It's spread over a longer period, so you don't see that same growth in insurance revenue. And on the P&C side, again, overall level for the whole market continues to grow. And this will continue to grow. GWP growing strongly at 16%. And with all the large infra projects, Vision 2030 and everything else, that we only predict that this is only going to become a very, a much larger source of growth for insurance in the kingdom. And again, remains highly profitable. Okay. So with that, I'm going to hand over to Hatim, who's going to dive into the line of business performance in more detail. Over to you, Hatim.
Um, okay, I hope my screen is visible. Okay, thanks a lot, Hasham and Amjad, for the overview. As we go into the lines of businesses, if we start first with medical, which is actually the largest line for the industry, the GWP touched around 22 billion in the first half of 2024 as compared to 19 billion. Now, if you think about it, out of this 22 billion, sorry, it touched 24 billion. Out of this 24 billion, around 17 billion is made up only by top two companies. So this is a very sort of concentrated market where the larger players do have economies of scale, and they also have the bargaining power when it comes to negotiation of rates with the providers, and they're benefiting from that. The rest of the players are trying to grow their books as well and trying to catch up in the market. Generally, in the Saudi industry, we only had listed companies in the past. However, this year, now that the insurance authority has started allowing branch licenses, so we saw Cigna starting operations. Cigna is a medical player right now, so the medical growth that technically that we see is slightly subdued because we are missing out Cigna's numbers for this year. As we move forward to the insurance revenue, and as Asham mentioned, the revenue is more like the earned premium, less the doubtful debts, and we are also comparing it with the sort of the gross combined ratios that we are seeing. So the black line is showing the position this year, versus the golden line, which shows the position last year, same period. So we can see that for medical, the black line is significantly above the golden line for most of the companies. Medical is one line where we are seeing more and more competition creep in. There's a lot of like companies are still going for the targeting more business or increasing the growth of the business by reducing rates, and this is something that we have been seeing in the market for a while. Once again, we are in a situation where companies, like when we do the pricing, the CEO or the underwriter would come to us saying that, you know, you're going to kill my business, or you're pricing me out of the market, reduce the rates. So these conversations have technically stopped for the past couple of years, but now once again we are going into these conversations, especially on the SME side. So in SME, we are getting a lot of push on rates. Uh, we've heard of companies issuing quotations for even as low as 88 or 90 reals as well per year, which are effectively very low given the cost base. A second trend that we are seeing in the Saudi market now is introduction of RCM or growth of RCM companies. RCM stands for Revenue Cycle Management, and they are there are some consulting firms who would come in. They would guide the hospitals how to maximize your billing, given certain coding. So as Nafis comes in, as things become more sort of code dependent, this opens up the insurance industry for risk, because this is where the providers might be sort of capitalizing on the revenue. So as we move forward towards the net service results of medical, we can see there are certain companies which are like highly negative as well. So a lot of companies have seen a dip in profitability or the profits turning to losses for medical this year. Some of the feedback that we got from the market is that a lot of this is because of reconciliations, older claims coming up, and those points are also coming across as well. But with hopefully once Nafis is sort of fully implemented and normalized, we will probably see that efficiency in the claim process is also coming in. But given the pressure that we're getting on the rates right now, this line is a bit difficult for the market and something that everyone needs to watch out for. As we move towards motor, last year we had seen the motor rates going up. In fact, it was late 2022 till the first half or up till September 2023 that we were seeing the motor rates going up. However, this after September 2023, when the Najam campaign came in trying to bring all the drivers under the ambit of insurance, we saw the rate started dipping, and the downward trend has continued up till now. Uh, Companies did make a lot of money in motor last year. In fact, as Asha mentioned, 2023 was the year in which all the companies made profits in the industry. However, given the rate competition has started once again, we are seeing that reduction coming in on the rates, and we are seeing a 3% decline in overall premiums going forward. As we move forward, so you can see as I mentioned, the rates were on the higher side in the first half of 2023. So we are actually seeing the results of those high rates. You can see for motor, the black line is significantly below the golden line as compared to last year. So for most of the companies, the current year's profitability has been more for motor as compared to last year. But what is worrying right now is this downward trends on rates. Uh, so as I mentioned, 2023 was a year in which motor rates were going up. There were profits. Now we are seeing pressure coming in both on medical and motor, which is a bit worrying for the trend for this, let's say, the second half of the year. And we are expecting that because of the price competition, again, these loss ratios or the combined ratios will start climbing and might start touching, let's say, 100%. And in the same theme, we can see in terms of profitability or the net service results for motor, we are seeing it positive for most of the companies. Except for just two or three companies, we are seeing positives across the board. And in fact, for most of the companies, we are actually seeing a growth in the profits. So the losses have turned to profits, or the profits have increased this year as compared to last year. So up till now, Alhamdulillah, things are good for motor. But what is worrying is this downward trend that we have on the rates. As we move forward, forward towards PNC, now this is one area where we are now expecting a lot of growth. One of the points that Hasham alluded to in his introduction in the earlier slides were on the economic activity taking place, both in terms of, let's say, the giga projects happening in the kingdom or move towards the Vision 2030. So we are seeing more and more construction projects coming up. Eventually, those construction projects will convert into property projects as well. We are seeing the growth coming in from that side. One other area in which we are seeing companies becoming more active is inward reinsurance. So historically, the companies in Saudi were not taking in a lot of or almost all companies were not taking in inward reinsurance on a facultative basis. We've seen this situation in other markets in the region, but now companies in Saudi Arabia also, given that they have some of the companies have good capital, they are now looking at inward reinsurance and trying to sort of diversify the portfolio that way. Uh, the profitability on this line has been there. The gross combined ratios are quite low. In fact, in a recently released Dear CEO letter, the insurance authority mentioned the amount of profits which are actually going out from insurance companies on a facultative basis for these lines. And those values were quite high. So I think what now the companies are focusing on is how to retain the risk themselves. In fact, right now we are looking at a lot of reinsurance structures for certain reports that we have to do, and also how can you attract local risk or, let's say, international risk on a facultative basis. So as I mentioned, the net results not very large negatives over here. The last segment is protection and saving. Now, traditionally, this segment has been very low. Normally, 1% of the entire market used to be PNS. This year, we've seen a lot of growth coming in. Primarily, the growth has been driven by Al Raji and Arabian Shield in this area. Tawnia also grew from a small base, and they've written around 40-45 million in premiums for this line. So generally, we have seen growth coming in this year, and this is one area where there is a lot of potential in the market. It's more about sort of customizing your products and your plans for the benefit of the customer as well. Uh, I'll not focus a lot on this slide for PNS because this is a long-term product and the profits emerge over time. So if I were just to summarize the margins that we are seeing as this year as compared to last year, so in case of medical, we have actually seen, if you look at the box plot, we've seen it going down, and we saw this in the present in the earlier slides as well. Uh, what has happened for motor is we are seeing the profitability increase. However, as I mentioned, what is concerning or worrying for us is the fact that now this might be challenged towards the second half of the year. Protection and savings and property and casualty have been stable across. Putting this across at very high level numbers in terms of profitability. So where does the total, let's say the total profit, how do you break it by line of business? So what we can see is for medical, there has been a reduction as compared to last year of around 0.46 billion. But at the same time, motor insurance has gone up by around 0.41. So technically, motor is compensating for the losses in medical up till now. And as I mentioned, what will happen in second half is a bit concerning now. We are seeing profitability coming in on the PNC side as well. So as we see the companies sort of grow their portfolio for this line, or at the same time look at retaining more, we hope to see more profitability in these segments. So this was sort of an overall overview of our report. The detailed report, anyways, is available online, and I think we can now take any questions that the audience might have.
Okay, thank you, Mr. Hisham. Thank you, Mr. Hatim, for your valuable insights. I would remind the participants again, if you have any question related to what we have discussed, please don't hesitate to drop them in the Q&A box. Okay, so we have received some questions. First questions, I would actually ask you, Mr. Hisham, about this questions. How do you see Vision 2030 shaping the insurance industry in Saudi Arabia?
Okay,
Can you please share your thoughts on this?
sure. This is okay, quite a broad question, but in terms of we've seen the trends in the market and the growth in the top line in lots of different areas. And essentially, if you look at Vision 2030, there's a hard target in Vision 2030 for insurance penetration to be to increase to 4 point, I think it's 4.3%, 4 point something percent of non-oil GDP. So as the economy grows, that target will grow. And I think we're standing at about 3%, and we're actually well on our way to that target. And what Vision 2030 envisages is diversifying the economy away from oil and gas to the non-oil sector, be it in manufacturing, financial services, electronics, whatever it may be. And a lot of large investments and projects are being developed right now. The Giga projects that we know, like NEOM, the building of the new airports, all the big events that are being held, all of this contributing to the growth of the non-oil sector. And all of this requires insurance, right? So if you think about building the property life cycle from the stage, so on the PNC side, it's going to grow substantially. So every development from the inception, the lenders providing the financing, getting credit insurance, to all the different construction, engineering as developments are being built, all the way through to once they're built, the liability, warranties. So on the property and casualty side, significant growth is going to come there. And in fact, when we were looking at some statistics on where the non-oil sector is actually growing, and if we look at the latest report from Saudi statistics, actually financial services and insurance is actually the fastest growing sector in the whole kingdom. I think it grew by over 10%. So there's so many opportunities. Vision 2030 is so broad and wide ranging, and there's a hard target, but also lots of opportunities. The way I see insurance, it's the lubricant that in the machine that actually enables a lot of the economy to function. So huge opportunities now. And we're seeing, like Hatim mentioned before, we're actually already seeing a lot of companies trying to take advantage of this. So exploring how do we expand more in the P&C side of our book? How do we retain more business? How do we potentially capture more in terms of inwards RI as well? So lots of opportunities for growth. I don't know if you want to add anything to that, Hatim.
No, I think you've covered it
Okay.
quite well. You had done a lot of detailed studies in this area for different work, so you've covered it well. Nice.
Yeah, in fact, what's interesting is in addition to the players in the market now, we're actually also seeing a lot of interest from multinationals to actually come into the market and set up here to take advantage of the opportunity in insurance as well.
And I think that one, if I can just add, I think that is also connected to the new requirements which are there to retain up till around 30% of the at least the treaty reinsurance in the kingdom. And even if you remember the graph that we saw in the Dear CEO letter, the amount of profits going out, or the amount of sort of profits with the companies are ceding out to reinsurers, especially on the PNC line. I think now the focus that the companies will have is how they are doing good business. They are underwriting good business, which is quite profitable, and then they are ceding it out to reinsurance companies. So there might be some focus on trying to retain that. And at the same time, given that 30% limit, we would see more and more reinsurance companies also set up in the kingdom, because right now inside Saudi Arabia, we only have one reinsurance company, if I'm not wrong.
Okay. So a second question is asking about the emerging risk. What the emerging risk should the insurance company in the Saudi Arabia prepare for the coming years? And also we have a questions about the climate risk. How will this climate risk impact the KSA industry?
Uh, I think so. When you think about emerging risks, the top two which comes to my mind are climate and cyber. So I'll start with climate first because there are multiple questions on that side. Uh, Recently we've been seeing more and more events happening in the region. Maybe 10 years back, whenever we used to sit with companies or talk about risk management, or even like when you answer rating agency questions, they have this question on natcat. So by default, the typical answer of insurance companies used to be, this region is not natcat prone. uh, After that, we've seen quite a few sort of hurricanes and storms in, especially in Oman. In Saudi also, we've seen the frequency of the floods is increasing as well. And I think this year what happened in UAE was one of the extreme events. We are saying it's a 1 in 75 years event, but maybe the chances are that this might happen more and more frequently. In fact, when we are doing reserving, we are trying to mark out dates in which we had these events. So initially it was November rains, then we have January rains, now we have February rains, and also April rains. So a lot of rains have happened with a short frequency. The April one has been most disastrous. So I think climate is one area that companies need to think about. But at the same time, we also have to evolve as an industry. So initially, when you talk about climate and losses coming in because of the rains, most of the insurance companies, what they're trying to think of is how do we exclude this? or how do we remove this as a risk? How do we protect ourselves? But what companies have to bear in mind is that they are providing a service to the community, trying to protect the community from these events. And in this scenario, like one of our clients came to us saying that, when you look at the motor vehicles in UAE, uh, any vehicle more than 7 year old cannot be insured on a comprehensive basis. So even if the person wants to get a comprehensive cover, he's not able to get it. Why don't we design something for the climate side of things for these people who are not able to get comprehensive covers because of the age of the vehicle? So in fact, they've recently launched the product as well, and for as an actuary for us also is interesting when we are looking at these types of products and we are trying to understand from first principles, from ground up, how do we price these. So this is one area that where companies can sort of differentiate themselves. And even on the commercial side, I was hearing of people, of companies coming up with deductibles, so higher deductibles, 50,000, 150,000, 10% of the claim, without any maximum limit. So when we do things like this, then it creates that distrust between the consumer and the insurance industry. So I think this is an area where companies will need to think about, obviously, their own risk management in terms of how they protect themselves and how they're securing themselves against these risks, but at the same time, what is the value of the cover that they are providing to the consumers? So climate is one side of things. Cyber has also started becoming more and more important. In fact, when we are doing product development, we are getting more and more requests of cyber products. uh, Recently, what happened with CloudStrike, that was a unique thing, and in that event, a lot of countries were affected at the same time. Airports went down, flights went down, flights could not move. So a lot of companies had been impacted. Then you have to think about the cost of recovery, the business interruption cost. So both cyber and climate, I would say, are on sort of top of the agenda from an emerging risk perspective. And this is where companies will now need to think about how they evolve with these new risks coming in. Hasham, if there's anything you want to
Yeah,
add.
yeah, just a couple of all really good points. There's a principle in insurance. I completely agree with your sentiment, right? We are, as an industry, we're providing a service to our customers, and it doesn't make sense to. I think there's more of an opportunity, right, to redesign our products to ensure that it meets their needs, rather than excluding. I mean, some of the examples you gave come across as very unfair to customers, in my view, and I don't think um, they would be viewed very favorably by the regulator if we actually tried to push those out. But for climate risk, one point, with the discussions around the new risk-based capital, this is actually now going to be real dollars and cents, because when the new RBC risk-based capital comes into effect, all of us in the industry, we will have to actually hold the extra capital to allow for these nat cat scenarios. And like Hatim was saying, these scenarios were never in our models, because the region was supposed to be nat cat free, wasn't even in the reinsurers models either. So this is actually going to impact the amount of capital that insurers have to hold. Um, but also it's an opportunity as well, I would say, in Saudi. So going back to the first question around Vision 2030. So on the positive side, there's actually huge investments in the green economy. So something like 50 to 70 billion dollars. We've got the largest solar manufacturing plant in the world that's going to be in Saudi Arabia. All the new developments have to be sustainable. So this actually creates a new opportunity for us as insurers, to moving away from energy, insuring traditional petrochems, to the new green economy, in predominantly solar. So it's creating lots of opportunities there as well. And on the second question, relating to cyber, this is, yeah, one of the things that Amjad mentioned, the new data privacy law that's come in. For us as insurers, this is inherently linked to the old SAMA, now IA regulations on cyber security as well. So again, this is something that I know that a lot of companies are very actively looking at the moment.
Okay, so Third, the questions, how do you see the growth of life insurance in Saudi Arabia in future, and what opportunities you are seeing for this specific product?
Okay.
I
Do you
can
want to
take
take
that if you want.
do you
Yeah.
want to take that, Hatim?
Uh, okay. So as we saw in this slide, in even in the presentation, we've seen a lot of growth in uh, the protection saving segment this year. One of the key reasons why and again this is a personal thing which I believe that one of the key reasons why life insurance or long term insurance has not grown in the market is because of lack of proper distribution channels. In especially in Saudi Arabia, most of the insurance companies they are actually tied up with banks. And what I've seen in Saudi right now, they've not really capitalized on those relationships. The second thing which I feel has happened in the market is initial charges have been very high for companies. So the consumers do not see the value in the product. Rather than buying a life insurance product, why don't we just put our money in a bank account and we get a fixed rate? Again, I feel this is one area where given sort of improvements in technology also, we will start seeing sort of changes to the product development. In fact, there was an insurance company we were talking to in an other market, and we asked, okay, what are your upfront charges? It says very low. Okay, what's your surrender charge? No, we don't have any surrender charge. So the fact that they don't have any surrender charge, even as actuaries, it came to a shock to us that how are you going to plan? But they've designed something using technology in trying to sort of push their product where the consumer sees the value in buying an insurance plan as well. And there are a lot of high net worth individuals in the kingdom. If supposing if someone goes to them saying, okay, just put aside certain amount in an insurance plan, diversify your saving. That's a good avenue. So I do feel that there will be growth in this segment. Using technology and trying to make the sales process more convenient. Because as I mentioned in the past, also like even when it came to life insurance, companies used to have long questionnaires or medical tests and a lot of other things which would sort of hinder the sales process. Now companies are thinking of how do we make it more and more convenient for the end user so that it becomes sort of a straight through processing or very smooth processing for the individual, and moving away from the mindset that a person is buying a policy to try to benefit from the policy. No, they are buying the policy to get protection from them for themselves. So from that perspective, I guess there is a lot of room for improvement, and especially if we sort of move away from the traditional thinking of having, let's say, tied agents or very high upfront commission or charges, and think about more sort of agile products where your exit fees are small. Again, the person is not buying the policy to exit; he's buying the policy for a longer term reason. So if we think about and if you're able to design plans accordingly, we might see a good response from the market. Anything else, Hasham, you want to add over here?
Yeah, distribution definitely, but also I think maybe it's very untapped. It is very different managing a life company compared to our traditional business on the general insurance side. But I think it's also a function of just thinking out loud and demographics as well.
Yeah.
So Saudi Arabia has been population is very young. Um, i I think the average age is in the 20s,
Yeah.
but also we're seeing as time has moved on, the size of families is getting smaller as people start to age and think about savings. There's definitely a market there to compete, develop with banks on the savings side. So in other developed markets, life and pension products make think of my home market, right? Trillions of pounds in investments, and it's a very different um, profit signature or very different, acts as a stabilizer, if you like. Profits emerge slowly over time, slow and steady for the life insurance products compared to the volatility that we see tend to see more on the general insurance side. So, but I agree, there's lots of opportunities, but it does require a lot of specialist expertise, and a very different way, a more longer term view of managing your business.
Thank you. So since we are running out of time, thank you all for joining us today. It's been a pleasure to have you here for our webinar on the Saudi insurance industry. We have covered a lot of grounds. Mr. Hisham and Mr. Hatim provided their valuable insights and expertise about the insurance services results, insurance revenue, and the GWP by each line of business. One point that I want to add, we are excited to announce that our annual conference will be held on 26th of November in Riyadh, inshallah. So please save the date and join us for an engaging event filled with insightful discussion and networking opportunity. Lastly, thank you to our speaker, Mr. Hatim, Mr. Hisham, for sharing their expertise, and to all of you for your participation and engaging questions. We look forward, inshallah, to seeing you at next event. Have a great day. Thank you.
Thank you.
Thanks a lot, everyone. Thanks,
Thank
Amjad.
you. Bye bye.